Tax season 2026 has officially arrived, and it brings one of the most significant new forms we've seen in years: IRS Schedule 1A. If you are a service worker, an hourly employee, a recent car buyer, or a senior citizen, this single piece of paper could be the key to thousands of dollars in tax savings. This form was created to house the brand new below-the-line deductions introduced by the One Big Beautiful Bill Act, also known as the OBBBA. What makes Schedule 1A so unique is that these are below-the-line deductions. In tax terms, this means they reduce your overall taxable income but do not affect your adjusted gross income, AGI. Even better, you can claim these benefits whether you choose to take the standard deduction or if you decide to itemize on Schedule A. It is a bonus layer of savings that is available to millions of Americans starting right now. Before you can claim any of the 4 major deductions on this form, you must first complete Part 1, which calculates your Modified Adjusted Gross Income, MAGI. This is a critical step because every deduction on Schedule 1A is subject to income-based phase-outs. Essentially, the IRS wants to ensure these benefits are targeted toward middle and lower income households. If your MAGI exceeds certain thresholds, your deductions will begin to phase out or disappear entirely. For most people, your MAGI will be very close to your AGI, but Part 1 ensures everything is balanced correctly before you move on to the savings. The first major heavy hitter is the tip deduction in Part 2. This is a massive win for the estimated 6 million workers in tipped occupations, including restaurant servers, bartenders, salon workers, and even gig economy drivers. Under the new law, you can deduct up to $25,000 of your qualified tips for the year. To qualify, these must be voluntary tips reported on your W-2 or other approved forms. Mandatory service charges added by a business do not count. There is a phase-out for this deduction. It starts to decrease once your MAGI passes $150,000 for single filers or $300,000 for joint filers. For many in the service industry, this could effectively make a huge portion of their take-home pay tax-free at the federal level. Next is Part 3, the overtime deduction. If you are an hourly or salaried worker who put in extra hours this year, you can now deduct the premium portion of your overtime pay, typically the half in time and a half. The maximum deduction is $12,500 for individuals or $25,000 for married couples filing jointly. Like the tips deduction, this benefit is designed for those earning under $150,000 single or $300,000 joint. The goal is to ensure that when you work harder and stay late, you actually keep more of that extra money instead of seeing it swallowed by a higher tax bracket. Part 4 introduces a brand new car loan interest deduction. If you took out a loan after 2024 to buy a new passenger vehicle, like a car, van, or truck, you may be able to deduct up to $10,000 of the interest you paid on that loan during the year. However, there is a very specific requirement. The vehicle's final assembly point must be in the United States. This is an incentive built into the OBBBA to support domestic manufacturing. You will need to provide your vehicle identification number (VIN) to prove eligibility. The income phase-out for this deduction starts a bit lower, beginning at $100,000 for singles and $200,000 for joint filers. The final section, Part 5, is the enhanced deduction for seniors. This is a straightforward high-impact benefit. If you or your spouse are at least 65 years old by the end of the tax year, you can claim a flat $6,000 deduction per eligible person. For a married couple where both are over 65, that is a $12,000 reduction in taxable income. This is entirely separate from the standard deduction bump that seniors already receive. It is intended to help offset the taxes often triggered by Social Security benefits, though you don't actually need to be receiving Social Security to claim it. The phase out for this specific bonus begins at $75,000 MAGI for individuals and $150,000 for joint filers. While Schedule 1A offers incredible opportunities for savings, it is also a complex new addition to the tax code. Navigating the MAGI calculations, ensuring your vehicle qualifies for the interest deduction, or correctly identifying qualified overtime can be challenging. Because this form is new for the 2026 filing season, even some tax software might require careful input to get the math exactly right. If you have a complex income situation, such as being self-employed with tips or having multiple car loans, we strongly urge you to contact a tax professional. A CPA or enrolled agent can help you maximize these new deductions while ensuring your return remains fully compliant with the new OBBBA regulations. Don't risk leaving thousands of dollars on the table. If you are unsure about any part of Schedule 1A, seek professional advice to make sure your 2026 filing is handled correctly.